You know, so many people have been asking me, hey Michael, when is the housing market gonna crash? What's gonna happen? You know, why aren't we seeing, massive price declines yet? Why isn't everything completely falling apart? Well, you don't have to worry about that too much longer, because thanks to the Biden administration, they just passed a new rule, which many of you already know about, that pertains to mortgage lending. And this is going to affect everyone who gets a mortgage to buy a house. And if you want to see guaranteed foreclosures, well, this is a doorway to that, because basically what's happening is they are going to start charging people that have really good credit and put a higher percentage down on a property, say 15 or 20% down, a payment out of each month of their mortgage to subsidize home buyers that have lower credit and lower income. So before we get into the details of all this, because I found a great article that really outlines how one of these loans work, and we're going to get into that in this video. Let's just think about the repercussions this is going to have on the housing market. First thing is, a lot of people are probably very upset by this, or even outraged if you have great credit. Somebody like myself, if I go to buy another property in the future, then I'm going to be paying for this because I have great credit, and I'm going to put a sizable down payment on the next property I buy. So someone like me is directly affected by this, along with all of you. But think about what they're doing, okay? They're rewarding bad behavior, people that don't pay their bills on time, and saying, yeah, we're going to give you a leg up with the housing market, okay? And basically give them help with closing costs, and give them a lower interest rate, which is totally upside down from the way it has always worked. In the past, you'd be punished for having a bad credit score and punished for not paying your bills on time. Well, that's all out the window now. As much as this sucks for people like me when you go to buy your next property, or people like you when you go to buy your next property, if you have good credit and you're going to put a decent down payment, well, there is a silver lining in all of this, and that is that this is likely to all lead to a guaranteed wave of foreclosures in the future. Because what they're essentially doing is they're helping people to buy homes with our money, okay? Once they're in there, they're one emergency, one life problem, one hiccup away from losing that house in foreclosure. And we're already seeing some foreclosures pick up, which we're going to talk about in this video too. So lots to cover in this video, guys, that pertains to all of this. And they're helping people that shouldn't be buying in the first place get into a home and buy the place, right? Well, when they lose it, that's when the opportunity for people like you and me comes in, and we can go in there and buy that house for cents on the dollar, because somebody that bought it to begin with should have never even owned that house. So there is going to be some opportunity coming from this, I can see, over the next several years, when people default on these loans, when they get that property tax increase that is inevitable, that they will get, when they get that insurance bill increase, when they get hit with that new roof that they need to replace, when they get hit with the new air conditioner, okay? I'm not like hoping and praying these people lose these homes. That's not really what I'm saying here. I'm just going by the way it typically goes. When you have people that are typically irresponsible buying homes, then the chances of them keeping that home for quite some time, the odds are pretty low. So let's get an overview of how this works, okay? Since this is punishing people with good credit, say for example that you have a 680 credit score, which is not even that great, but it's better than the people that would normally get these type of loans, okay? You'd be paying around $40 more per month on your $400,000 mortgage that you just got. So $40 a month is an extra $480 a year, guys. So that might not sound like a lot, but it scales up. Say you buy an $800,000 house, that penalty could easily be double. This new finance rule goes into effect starting May 1st, which is right around the corner. So pretty much just blindsided people, A lot of people in the mortgage industry are unhappy about this. I'm sure a lot of real estate agents are psyched about it because it qualifies more people to buy a home, essentially. So it kind of gives real estate agents more clients. So the people who are speaking out against this, like the former commissioner of the FHA, he says this is a confusing approach, it won't work, and more importantly, couldn't come at a worse time for an industry struggling to get back on its feet after these past 12 months. Because you already have people that are struggling with high interest rates and are tapping out of the housing market due to affordability. And these people that have been saving for years and have all their ducks in a row to buy a home, well, this extra $150 or $200 a month they might have to pay on their mortgage now could be enough to put that home out of reach. Not only is it punishing people that have good financials, but it also could be actually punishing them in a far worse way, potentially putting their home purchase completely out of reach, which would be worst case scenario for people when you think about it. So hopefully that's not going to happen to a lot of people that have been responsible and have been saving. Once this gets implemented, we'll know more about how this is going to be affecting people like that.
The owner of this house bought this place back in 2012 for $850 grand, and even before then, in 2009, it sold for $450,000. Fast forward to today, the house is for sale for $3 million. They tried renting it out a few times over the past couple years with no luck. But let's talk about the property taxes, because that is something that we really need to focus on in these videos. The current owner is paying $15,000 a year in property taxes, and that's with a $1.3 million assessed value. And before you think that's crazy, just wait until the new person pays $3 million for this house. Well, that property tax bill is going to roughly double. They'll probably be paying about $30,000 a year in property taxes.
Now, the current director of the Federal Housing Finance Agency, Sandra Thompson, she said that these new rules are designed to increase pricing support for purchase borrowers limited by income or by wealth. Well, real estate's expensive, okay? And giving people a few extra $1,000 in the beginning is not going to help them once they actually own the house and they have to put on their big boy pants and pay for all the costs related to home ownership. So I feel like they're really not thinking this one through. Whether that's on purpose or not, I have no idea. But it doesn't really matter what the intentions are at this point. What I'm trying to say is this plan is not well thought out at all. Because if me, somebody that makes amateur YouTube videos walking around the neighborhoods, can think through this plan better than our government officials of how this might end up, then you know we're in big trouble. So they're saying that the reason this is done, it was to try to narrow the gap in access to credit, especially for minority home buyers who often have lower down payments and lower credit scores. The gap in homeownership opportunity is real. America is facing a severe shortage of affordable homes for sales combined with excessive demand, causing an imbalance. Here's another reason they haven't thought this through. First of all, this is probably going to affect the lower end of the housing market more than anything, aka the starter homes, right? Houses that are between $150,000 and $300,000 are likely going to be the biggest candidates for these type of loans. And those are the type of homes that everyone wants to buy for the most part, because that's what people can afford. So what this does in the end is it makes those homes more unaffordable, okay? Because you're allowing more people to be able to get in there and buy them who otherwise wouldn't be able to. So now that we kind of went over the overview of this, let's get into the details of how a loan like this will actually work. Basically, this is going to be called an HFA loan, okay? It sounds very similar to FHA, but it's not FHA, it's HFA. And they're targeted towards first-time home buyers or borrowers with low or moderate incomes who might have trouble qualifying for standard conventional mortgages. They offer low interest rates, low closing costs, along with down payment assistance, all thanks to all of us who are going to be buying homes without these subsidies. So these loans are also going to be only available through the state housing agencies, and people that want to get these loans are going to have to prove a couple of things. They're going to have to prove that their household income is below the median in the area. They're going to have to do a first-time home buyer class. They're also going to have limits on the purchase price. So like I said, this is going to have a major impact on the lower end of the market, much more than the higher end. Houses like this is not going to be affected, guys. People that are qualifying for these kind of loans could never buy one of these homes that cost, you know, $3-4 million or even $1 million. So this is going to be the low end of the market that's going to be feeling the squeeze from these new loans. So Fannie Mae and Freddie Mac designed these loans, but they don't fund them. They're still done through private mortgage lenders. And so someone who gets this loan, there's a minimum of a 3% down payment, okay? And that's also basically given to people as a gift through the down payment assistance program within this HFA loan. This 3% down payment is basically a gift. It's a forgivable loan. So they just give you the money, okay, to buy the house. So in order to qualify for this loan, you need to meet a few basic requirements. You need to have a 3% down payment, or they'll just give you the down payment, right? A credit score of at least 620, so at least they're not going any lower than that. With regular FHA loans, it's minimum 580, so at least there's a slight improvement here. And then the debt to income ratio, they're doing 45%. So they'll let you buy a house that is 45% of your monthly income. Don't you realize the problems with this right here? So you already can see the huge red flags with this that are saying that they're giving people a 45% debt to income ratio, right? The common financial advice is, you know, you shouldn't be buying a home that costs more than 30% of your monthly gross income, but yet this HFA program is willing to give people 45%. Like I said earlier, guaranteed defaults coming, guys. One hiccup in life, one job loss, that's it. They're missing mortgage payments. That's a guarantee. And so then they also have an occupancy requirement. At least one borrower on the loan must use the home as a primary residence. So this cannot be used to purchase investment property. However, someone can use this type of loan to buy, say, a duplex or a fourplex, anything that's still considered residential, because anything over a fourplex would be considered commercial real estate. So someone could still use this loan to buy a fourplex and, say, live in one unit and rent out the others. There's also income limits, like I mentioned earlier. Usually has to make a certain percentage less than the area's average median income. And also, they're limiting the amount of the home purchase, but there's no real details on this yet. There's no hard and fast rule that says your income needs to be 10% lower than the median in the area. There's nothing saying right now that the maximum purchase price is $400,000. Nothing like that. So we don't really know all the details yet of exactly how this is working out. But if you are a mortgage lender and you watch my channel, if you do one of these loans over the next couple months, please write me an email. Go to the About section in my channel and let me know the details of the terms of the loan, of how this actually worked out, so we can cover it more in the future. Now, there is another silver lining to this for people that do have good credit and are purchasing more expensive homes, is that people that are getting these type of mortgages are probably not going to be competition for you in the market, simply because they aren't going to be buying in the same price range as you might be looking into. And the other thing that we don't know yet is, are they going to charge cash buyers some sort of subsidy fee as well? Because as of right now, the rules state that this is going to be an extra fee tacked on to you when you're getting a mortgage. But what about if you go out and buy a house for cash? Are you still going to be affected by this? We don't know yet. I wouldn't be surprised if they do throw something in there, even if it's not part of the deal right now. So let's keep an eye out for that as well. But if you want to avoid this extra ridiculous fee every single month, then as of this moment, the only way to do that, if you're a well-qualified buyer, is to pay cash. And I know a lot of people just can't do that. Now, here's the other thing to think about with all of this, is that this is not like the first time we've had programs for people to put low amount of money down on purchasing properties, if not no money down. You know, we've had VA loans for the longest time. You know, we have FHA loans, minimum 3.5% down. We have USDA loans that are also 0% down. So it's not like having loans like this is a new thing. But if we look back what happened during the last housing crash, we saw a ton of these programs where they were giving people so much financial help to get into these homes through these first-time home buyer programs that they're practically giving houses away. And that's what led to so many short sales and foreclosures, because it was basically a subprime lending crisis where people that were getting loans shouldn't have been getting loans. And doesn't that sound familiar? Doesn't that sound exactly like what's happening here, guys? I mean, you can say whatever you want about this, but the reality is they are taking from people that have worked hard their whole life to keep their finances in order and giving it to people who haven't done that. That's, in simplest forms, what they're doing, and it's criminal, you know? It's not something that anyone should be forced to pay for. In fact, this goes against the exact rules of life, which is people need to pay for their own mistakes in life. If you make a mistake, then it's on you. It's up to you to suffer the consequences that come from that mistake. But instead, our government is saying, yeah, don't worry about making mistakes because we're here to right them on behalf of all the people who try to be more careful in life. So it really isn't fair. I don't like it one bit. I think it's a joke. And listen, guys, it's not like I have no empathy for people that fall on hard times and somehow have their credit score messed up or whatever. You know, that does happen to people. There are circumstances where people lose a job, they go through a divorce, or they're disabled, something happens, and you can't pay your bills on time for whatever reason, and it sinks your credit score, okay? So the government here is saying, well, someone like that shouldn't be denied the ability to buy a home. Okay, well, the problem is, guys, owning a home is expensive. In a lot of cases, more expensive than renting. You can't just look at the mortgage payment and say, oh, this is what it's going to be, and that's what rentals cost, and it's roughly the same, so I can be a homeowner. It doesn't work that way. We even made a whole video earlier this week about how people here in Florida are getting pushed out of their homes because of how expensive the insurance is, how much the property taxes have gone up, and all of these people who are going to be buying homes under this new program are going to be facing a lot of those same obstacles, along with the thousands of dollars that come every year in the form of home repairs. And if we know that the last housing crash was fueled by subprime lending, well, to me, this just means this is a guarantee of the housing crash 2.0 coming from all of this. Now, I think it does kind of depend on how many people end up getting these loans, which we don't really know yet. We don't know how many people are going to qualify for this and actually go out there and buy, because the other good point of this, there are a few silver linings that I'm thinking of along the way as we're discussing this. And the other one is they are introducing this program in the midst of a recession, when people are losing their jobs, when inflation is eating away a big chunk of their monthly budgets. And you're not going to see a lot of low-income people probably go out and do this, simply because buying could still be more expensive than renting a place. So why would anybody in their right mind go out and try to buy a place that costs, say, $300-400 more per month than what they're paying in rent, just because they can kind of get into the house for free, you know? Unless they're like professional scammers and trying to take advantage of the local foreclosure laws and stay in the house on purpose and squat in there on purpose until the house completely goes through foreclosure, I'm sure you're going to see a few of those antics happen as well. But unless that's the case, most level-headed people are not going to make this decision. But just keep in mind, the more of them that do, then the more houses that we're going to see as foreclosures, as short sales come up sooner than later. Anyone who's been waiting for this housing crash might not have to wait that much longer, because we already had so many things working against us before this started, and now that this is going to be implemented starting on May 1st, I think in a year from now, you're going to see a lot more defaults and the amount of foreclosures ticking up. Now, with all these ridiculous antics going on from our government, I think this is a great time to have at least some of your money tied up into physical gold and silver, guys. Everybody who watches my channel probably knows that I am a proponent of owning some physical metals, and the typical advice is to own 10% of your wealth in physical gold and silver, okay? And the reason for this is simple. It's to protect that percentage of your wealth against inflation, against the money printing, and against, let's face it, the ridiculous programs that are being introduced left and right, just like this most recent one that we're talking about right now. Because as of this moment, the government is still not subsidizing people who buy gold and silver, so you don't have that going on just yet. And some people look at this as like a doomsday investment, but I don't look at it like that. I look at it as just a long-term way to preserve your wealth. You know, you don't buy physical metals to flip them like flipping a house. You don't buy it and sell it 60 days later for a profit. It's something you buy and sock away like a savings account or like a 401k or some other type of investment account that you hang on to for the long term, and then one day down the road when you're ready to cash that out, you have money that you were able to save over the years that didn't get completely wiped out by inflation or a bad economy. So if you want to take possession of some physical metals or you want to invest them into a retirement account, make sure to give National Gold Group a call at 1-888-840-5945 or use my link in the description below, MB Gold 2023, and get yourself set up with some physical metals today. Now, speaking of foreclosures, we're starting to see more people lose their homes to foreclosures due to all of the foreclosure moratoriums that have expired nationwide now. During the first 3 months of 2023, lenders have repossessed nearly 96,000 properties, and that is up 22% from the same period last year. And the areas where foreclosures are surging the most are in the following areas. States like Illinois, my home state, had the highest foreclosure rate last year at 1 in every 762 homes, followed by Delaware, 1 in every 812 homes, and in New Jersey, 1 in every 824 homes is a foreclosure now. And right behind those places, California is starting to catch up because they have about nearly 7,000 cases in foreclosure proceedings right now in the first quarter of 2023. And right behind them are Texas, Florida, and New York. That's the thing, guys. People think that because, you know, everywhere hasn't crashed all at once yet, and you're not seeing double-digit price decreases everywhere, that somehow there's not going to be a housing crash. But people forget that all of this takes time to work itself out. You're starting to see these foreclosures come back. As the economy gets worse, you're going to see more foreclosures. And people that bought recently that don't have enough equity in their homes or even underwater on equity in their homes, if they lose their job, for example, they might not opt for a foreclosure. They might try to short sale the property instead, since it will have a much less detrimental impact on their credit. So over the next couple of years, guys, I think we're going to see the foreclosures and short sales come roaring back, just like we saw in the last housing crash. All these lenders starting to catch up on foreclosures that they weren't able to do for the past few years. All these ridiculous new loan programs available for people that probably have no business buying a home. Those are all potential foreclosures coming to a city near you. And like I said earlier, one emergency away, people start going into foreclosure. In order to go into foreclosure, you only have to have a loan that's anywhere between 30 to 90 days delinquent, depending on the state you live in. And to give you an idea of how many foreclosures we might be able to see in the future, listen to this. U.S. Department of Housing and Urban Development, they suspended foreclosure and eviction proceedings from March 2020 to July 2021, okay? And that moratorium helped 1.6 million homeowners avoid foreclosure as of September of 2022. So even if half of those people end up actually falling into foreclosure, guys, that's an extra 750,000 homes that could hit the U.S. housing market in the form of foreclosure. That combined with the building that's going on, you don't think that's enough to cause a housing crash? I completely disagree. I just think that the government and the Fed have been doing everything they can up until recently, when the Fed has been doing their interest rate hikes, to keep this thing going. Now that it's last call at the party and this is basically over with, everything's going to start falling apart. and they're just not going to be able to hold this all together anymore. One good analogy I heard about this was it's like you have a dam that's starting to fail, and they're starting to plug up the holes, but more new holes keep popping open, and eventually what happens is the dam bursts. And I think we're at the point where they've already plugged a few holes, but we're seeing some new holes start to come out, and these guys are out of options essentially. Now, one last thing to mention here real quick is that there's a new startup in Texas that is now helping people buy homes with Bitcoin. How about that? Okay, for all you Bitcoiners out there who have been waiting for the day to come where you might be able to buy real estate with Bitcoin, it looks like that day is getting closer, and that has always been my hope for Bitcoin's future, because I feel like it would be a fantastic way to buy real estate. It would cut out so much of the red tape when it comes to buying real estate. Of course, the biggest problem with buying or accepting payment with Bitcoin is the massive fluctuations that it sees in its value sometimes. So if you buy a house for 5 Bitcoin today, that's going to be like a steal compared to buying it for 5 Bitcoin about a year ago. You know what I mean? But anyways, this company is called My E-Listing. They have a website similar to Zillow where people can list commercial and residential properties for sale, and they can buy these properties either using cash or cryptocurrency. So there's no financing for these properties right now. And like I said about cutting out the red tape, apparently they can close these deals in just 1 business day. So that is the benefit of using something like Bitcoin to buy real estate. It's just cutting out all the ridiculousness when it comes to buying real estate. Typical closing takes 30 to 60 days, and this just cuts all of that out. I remember this house was for sale.
Well, by the looks of this place, you wouldn't know it was still for sale, but in fact it is. But the new listing agent, because they fired the old one, decided to forego the for sale sign and all the fancy marketing. They don't even have good pictures for this place. They tried selling this place all the way back in August of 2022 for $1.9 million. Today, the place is for sale at $1.5 million, and lo and behold, this person is delinquent on their property taxes. And the sad part is, look how low their property tax bill is. This person must have owned the house for a very long time. Assessed value is only $176,000, and their property tax bill is only $2,600. So if they can't pay that, then these guys must be in serious trouble and probably need to sell this house ASAP.
So basically how this works is Coinbase Commerce will convert buyers' crypto into cash, and Millennial Title and Championship Title will handle the title work. And one example of how this looks for a listing right now is there's an example listing in Texas for a house for sale listed for $499,000, or you can buy it with 17.5 Bitcoin or 256 Ethereum. So you can even use Ethereum to buy this as well. And for right now, they only allow Texas-based homes to be listed on the platform, but they plan to expand to more states in the future. So I could easily see this coming to Florida in the near future. Now, of course, this doesn't really affect anybody unless you have a ton of crypto and you're basically rich, because you need to be able to buy a house with cash still. You're just using crypto to buy the house instead of cash. That was always my hope for Bitcoin. You know, that's why I ended up buying Bitcoin, because I saw the potential for this in the future. And I always thought, well, if Bitcoin, you know, does keep appreciating in value and goes up to the levels that they were saying, maybe over 6 figures one day, then it could really help out when it comes to buying a property. But of course, there's a lot of risks involved with that, guys. I'm not going to get into all this. People know that buying cryptocurrency can be pretty volatile and you can lose a lot of money. So, but I do think programs like this are starting to finally shed a light on the true potential and the real world use case of crypto. If you guys enjoyed this video, make sure you click the bell notification down below. YouTube will alert you every time I post a new video. And if you don't want to wait, check out my next one on the screen right over here, and I'll see you in the next one.